Hey everyone, this is Kirk here again at OptionAlpha.com. And in this video, we're going to talk about multiple moving averages and ribbon studies. This isn't really a widely used technical indicator, but I really like the study. It's really great to use. It's very visual, which I like. So let's get right into it here. So some background, we all know that multiple moving averages are all over. They're the easiest thing to use, moving averages, simple moving averages, exponential moving averages, and they're accurate and they're visual, so they're easy for everyone, right? They're a very beginner tool. But multiple moving averages even help show when a trend is getting overextended or reaching a top or a bottom. And that's what we're really going to be looking for when we talk about ribbon studies. When you use just a regular simple moving average or exponential moving averages, you don't really get a feel for overextension. You know that it's getting far away from the averages, which is a sign in of itself that the index is getting overextended, but you really have no visual concept of that other than just the pure distance between the price and the moving average. So when we typically see ribbon studies, they consist of approximately 8 short-term and 8 longer-term exponential moving averages. Now these shorter-term moving averages can vary in length and are more dependent on the time frame you're trading. So on the chart to the right, you can see that we have about 16 different moving averages plotted against this particular stock. Now each blue line is a different moving average and of different and varying lengths. So you can see it creates this intertwining web that weaves and moves with the market. And that's what we're really concerned about. The reason that we can use multiple moving averages and ribbon studies is purely for convergence and divergence. That's what they're really good at. So number one, when you have ribbons that start to become more parallel and evenly spaced, then you can start to assume that the current trend is very strong and for more or less in agreement with the other signals since they're moving together as a collective. So you have all of the moving averages that are continuously moving higher. They're all evenly spaced. It pretty much seems like you have a very strong trend in place. Now, when the ribbons start widening out and spreading, this signals that we are starting to reach a market extreme and could be the end of the trend. So short-term moving averages are reaching extremes, and then the law of probability suggests that these levels won't last much longer. So as we start to see ribbons really expand and the distance between the moving averages really increase, then we know that the short-term market is going very, very much astray or extreme from the longer-term averages. And then finally, when we start to see the ribbons start to converge on one another and start to cross, then we know that a trend change has already begun to occur. Now, an early indicator after seeing an extreme level is that the shorter term moving averages will start to converge first, right? Because they're shorter term moving average, they'll be more reactionary, while the longer term moving averages will be a little bit more slower in how they converge. Again, they're a little bit more lagging the more days that we add to the moving averages. So how to use it, right? Well, again, we're going to use the same chart that we just had, but we're going to blow it up a little bit. And on this chart, we can actually start to see all three of the different ways you can use ribbon studies or multiple moving averages. So the first way is this expanding ribbons that are reaching a market extreme. So you can start to see that as the market starts to fall, the ribbons really start to expand. They're very tight in the beginning, but then they start to get wider. And you can see how this is just blowing up. It's like almost like a cone shape that's just exploding at the bottom. So that really gives us an early signal that we have a major market extreme or a market bottom or top starting to form. In this case, it was a major market bottom. Now, at the bottom, you start to see that convergence of the earlier or the earlier shorter term moving averages. And this suggests that a possible trend change is in place. So notice right down here where my arrow is pointing that no longer are we having evenly spaced or exploding moving averages, but some of the shorter term moving averages are starting to converge and it's making the lines darker. Now these longer term moving averages haven't yet converged just yet. They will later on, and you can see that they did converge and twist almost later on as the market started to rebound. But this early sign of convergence happened down here, and it actually happened as the market was forming kind of a double bottom here. And that gives you an early indicator that the trend may be beginning to change. And again, you can use this to get into a trend change much earlier and then wait for the longer term averages to converge as well. And that gives you a very, very solid signal for a trend change. Now, the third way we can use it, like we talked about, is actually the strong trend or parallel ribbons. So notice as the market starts to rally away from the bottom that it just formed, that the ribbons begin to become parallel. They start to make even, and there's no real exploding divergence or convergence on the ribbons. They're all just moving in lockstep. The longer term averages, the shorter term averages. Again, this suggests a very strong trend, and you can see that the market continued in that trend for quite a while here. So these are the three main ways that we can use multiple moving averages and ribbon studies. Again, it's a really great technical indicator tool. It's great for plotting trend changes. You can use them on daily, weekly, or monthly charts, as always with anything. Just make sure that you have a lot of ribbon studies on there. I typically like to have anywhere between 12 and 16 moving averages on my charts. So as always, I hope you guys really enjoy this video, and thanks for watching. Take a second to share this video right below with any of your friends, family, or colleagues on your favorite social network.